It's time to talk about Moody's Corporation. I'm reading here the profile from yahoo.com, the finance section. Moody's Corporation, through its subsidiaries, provides credit ratings, research and analysis services for capital markets worldwide. The company also offers credit training services, credit risk assessment products and services, and credit processing software for banks, corporations, and investors. Let's look at this chart. The chart is beautiful. I'm looking at a chart, a monthly chart going back to 2002. You've done nothing but make higher highs. In the last 4.5 years, you've only had 2 decent pullbacks. Late 02, you had a pullback from $25 to $20, and in early 06 from $72, $73 down to $52, jammed and hit the middle line, kind of comparable to like a 20-month moving average, and jam right back up. I have the price peaking up out of the tricks. I have the slope of the 5 turning back up. I have the tricks are sloped high. If you look at that tricks oscillator, it's sloped high and has a long way to go. And if I snapped a trend line from the bottom of 2002, that low when it hit around $20, and that pullback in April around $52, if you snap a trend line right there, the trend line is going to come up just up under about $60. So we'd say that the support is around $60. If you were looking to buy Moody's, and Moody's is very influential with Wall Street. Moody's is the one that gives different type of ratings, and you'll start to hear different risk assessments when the S&P is looking at stocks, and they start to deem that stocks are kind of falling over, they're dying, they become depleted. Moody's has a hand in that type of rating service. So Moody's matters on Wall Street. It matters to the S&P 500. If you're looking to buy this stock, put a stop around $60. Could this stock go to $100? If it breaks the 70 level on a monthly close, and with the slope of that tricks, slope of this moving average starting to turn up, how it's really hasn't had too many sellers over the last 4.5 years, this stock is very strong. I mean, if I snapped a channel on the top side, which I don't always do, from the 2 highs of 04 and that high of 06, if you snapped a line right there and it went up, would it hit around $85, $95? That's a projection area. So Moody's looks very good. When it gets outside this Kelder channel, as you see here in late 04 and most of 05 and early 06, it can jam up outside of that. And that means there's nothing but buyers when it comes to institutional investors. There's just small amounts of selling, and other institutional investors come in and snap those shares right up. So you have heavy demand here, and the supply is smaller, which we want to see. Nothing but higher highs, higher lows. Everything looks good in this. I like Moody's. Moody's, I would recommend, is 10% of your portfolio. A lot of the stocks we have a 5% recommendation, maybe a 7%. Moody's, I like 10%. Put that stop, though, at $60. Make sure your risk assessment on this is 1.5 or 2% at max. Maybe 1 to 1.7% risk, and your maximum gain could be 3% or 4% or maybe even higher. It matters. The institutions that come in and buy this up over the next 1 to 2 quarters. So Moody's Corporation, we like it as a strong buy. 10% portfolio allocation. Put your stop at about $60. This is Blake Verdun of Bark Street Investments. Soon barkstreet.net will be up. And again, pass this around to family, friends, institutional investors, money managers, anybody that you feel is interested in the stock market. And they took a survey, and they said over 73% of Americans are invested in 401k. So really, 3 out of 4 people in your neighborhood, in your subdivisions, 7 out of 10, they are somehow invested in the stock market. They need good money managers. They need people who understand the technical analysis of the market, breakouts, breakdowns, strong buys, strong sales. Blake Verdun of Bark Street Investments. Have a good day.